Hello, everyone. Thanks for joining us today and welcome to this educational presentation where today I'm going to talk to you about the perfect tool for breakout traders. Now, breakout traders usually look for some type of support or resistance to be penetrated, either to the upside or to the downside. And this is all well and good, but oftentimes you have to wait for those areas to be touched or broken through. And many times you may be giving up a lot of the point gains. For example, let's take a look at this chart here in UNH, United Health Group. As we see here, let's say you wanted to go long, but you're waiting for a breakout to the upside. You have a couple of chances right here. You either have to wait for this to be broken out, this resistance, or maybe even this point right here. Well, today I'm going to teach you a technique that wouldn't have waited for those areas to be penetrated. In actuality, you would have bought right here, midway through this bar, so that potentially you wouldn't have to wait. You could have potentially captured up to 60 points as opposed to waiting for those other areas to be penetrated and perhaps only captured a small portion of that. This is why we call this the perfect tool for breakout traders. So welcome, my name is Steven Primo. I'm the president and founder of Specialist Trading. 15 years ago, I teamed up with ProTrader Strategies with one goal in mind, and that was simply to educate traders around the world. I'm happy to say now that we have students in over 115 countries and in every state in the United States. Our goal is simply to educate you so that you can make your own trading decisions. I know a lot of you are saying, well, why do we have to do that? Why can't we just get signals from you? Or why can't we just go to some chat room or some trading room or listen to some guy on TV tell us what to do? Well, if you think about it, the majority of students are always trained that way, myself included. When I first started trading 45 years ago, I was trained to listen to someone or something else tell me what to do, tell me what to buy, tell me what to sell. And it's my opinion that that's why most traders fail. It's been estimated that upwards of 85% of all traders fail. It's because you're taking yourself out of the game. So for that reason, we want to put you back in the game. And the only way to do that is by making your own trading decisions. Now, a lot of traders have difficulty with that because they say, well, Steve, I haven't been trading 45 years. I didn't trade on the floor of the exchange the way you did. I don't have enough knowledge or experience. So, I'm just doing this part-time. Well, trust me, you can learn how to make your own trading decisions if you're given the right education. And that's the service we provide. We are an educational company with one goal, simply to educate you how to trade. And you'll see that in today's educational presentation. Now, before we begin, once again, we are required to share this with you by law. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results today using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. Now, I know a lot of you would like to get education on a daily basis. For this reason, we have a Twitter page, so please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down because every day I post about 5 or 6 different postings of snapshots of our strategy signals and little techniques and bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now, as I stated in the opening statements, this is an educational presentation. Why? Because we are an educational company. Remember, if you've come here today thinking that I'm going to tell you what I think the market's going to do, or what I think the interest rates are going to be, or what I think the jobless claims are, or the support and resistance levels are, or the first time frame that you should be trading, you've come to the wrong place. Remember, these are things that most websites promote. They want you to listen to what their ideas are, and this, once again, would be doing you a disservice. Our goal as a true educational company is simply to teach you how to trade. Teach you how to trade with a specialist edge. This is the same edge that was taught to me some 4 decades and what has sustained me. And hopefully I'll be able to do the same for you. Okay. So since this is going to be a class, just a couple of things. I want you first to ask me as many questions as you'd like, but please wait till the end of the presentation. I don't want to stop for every slide. We'll be here far too long on your Wednesday. So please, if you have a question, kindly write it down and try to remember it. I promise it. I will get to it at the very end of the class. Also, the other question that is usually brought up that I will answer firstly, is this being recorded? Yes, it is. We record all of our webinars. So if you have to leave early or if you're having technical issues, oftentimes if you just log off and then log back on again, your issue would be resolved. But if you're still having issues and you can't see or hear the screen clearly, we will send each and every one of you a link to this recording, okay? And then lastly, remember, this is a webinar, so please kindly disable all cameras and microphones. This is a static presentation. All right, with that stated, let us begin today's educational class. So we're going to be talking about breaking out, in other words, trades that break out of support and resistance. And the way we do that is by using one of our most popular features. That's our PTS dynamic stop levels. Now, if you're not familiar with what these are, here's what a definition is of a dynamic stop. This is a proprietary stop placement formula that moves with the ebb and flow of price and is specifically designed to track the behavior of the market that you're currently trading. And that's any market and any time frame. So as we look at this chart here, well, before we do, dynamic stops, actually one of their main functions is to keep you in a winning trade as long as possible. So this brings us to the chart I wanted to share with you, because the main function is as a stop placement and to have you grab as much gains as you possibly can. For example, we're looking at Oracle here. Here's a weekly chart going back a couple of years. All right, let's say that you had purchased this here, okay? And you wanted to know, well, how do I protect myself in case it's a bad trade? I just don't want to hang on forever. Well, what you would do on our platform is simply click on in the top left-hand corner, dynamic stops, and they automatically appear. These are the two sell stops that you can choose from, deciding where you want to place your stop. Now, as the trade unfolds, the dynamic stops also will be based on the behavior of the market. Now, most traders looking at this would say, well, Steve, we're starting to come down here. Look at, we have 4 weeks of downward movement. I want to get out. I don't want to be stopped out with a loss here. All right. But the dynamic stops actually generated a setup right here for you to place your stop. So there was no need to get, impatient and to, worry about the losses. This is where the market behavior was telling you that most likely the trade would come to an end, and look what happened. It kind of bounced right there. Now, even though it didn't bounce that much and started to come lower, another dynamic stop level was generated right here, and price started to go higher. So once again, if you had gotten a little scared or taken your profits early, you would have given up a lot of profits, and all the way up, based on market behavior, the dynamic stop levels were generated, keeping you in the trade as long as possible. And this works also to the downside. Here's a picture of the British pound Canadian dollar. Same process applies, just because we're looking at currency pairs. Let's say you generated a sell signal right there, okay? Well, on our platform, click on dynamic stop, and it would have generated a stop right here above this high. Now, I know a lot of you may be saying, well, Steve, this is simple. You're just placing stop levels either above or below the most recent highs, the way we have here. Well, that's not really true, because remember, this is based off market behavior. Now, the very next bar was not a high or not a low, but a dynamic stop level was placed here, and it moved down your risk. And all the while down, there were no new highs being made, but the dynamic stop levels were being generated, locking in some profits. Now, at this point, you say, hey, I've got a really nice profit here, and my stop is up here, so I think I'll, take a profit, or it looks like the trend's going to be changing, right? Well, another stop level generated right here, and price went lower. So that's really the main function, and that's how we design these dynamic stops, to keep you in trades as long as possible. Different functions, different ways to apply them. But we found out through the years, and also through a lot of our students telling us, that there are other advantages of trading with the new dynamic stop levels. And this is what we're going to be talking about today. This is a tremendous advantage that we've seen our students use and myself use as well. And this is using and applying the dynamic stop as breakout entries. So this is the technique we're going to be discussing today, and I'll take you through a step-by-step process of how to apply this. Okay, it's extremely simple, but please remember, this is not a strategy. A strategy comes complete with all the rules, all the pieces of the puzzle, money management, exit points, exact entry points, and things of that nature. This is just a technique highlighting a highly probability area for entry, okay? So let's look at this chart here in Apple. This was just about a month ago. As we're looking at this chart, we see that the stock has come down, but now it's starting to go back up, okay? If we were looking for a breakout, we may want to purchase it up here when it breaks out of this top level. But we don't want to wait that long. I mean, we'd be giving up a lot of points waiting for it to come all the way back up. So here's the first thing you do. First thing you want to do is apply a 20-period simple moving average, okay? And since we're looking for price to break out to the upside, we only want to be interested in dynamic stop levels that are generated below the 20-period simple moving average, okay? So what we do now, once again, is to click on dynamic stops on our platform, and we see the dynamic stops that are generated below. As we see, one was above, but we're not going to be interested in that one. We're only interested in the ones generated below, okay? Now, when we see a level generated below, we wait for price to unfold, and the first time it penetrates that to the upside, as it did right here, this would be your buy placement right there. And as you can see, another buy placement was just a few ticks high. Now, you had a choice. You could actually buy 2 lots or just stick with one, but as you can see here, there are 2 chances to get in. Now, I'm just going to share this. This is just a very generic area to protect the trade. If you're buying right here, you just look where the most recent low was, and that's where you place your stop, somewhere just below there, 1 or 2 ticks below. So you're buying right here. You would be exiting here if the trade didn't work out. So this is your risk, okay? As you can see, coming into this last week in July, the stock went up 18 points, all right? Now, had you waited for it to break out right here, roughly at 150, guess what? You would have made 5 or 6 points. But using the dynamic stop levels and applying the 20-period moving average, you could have potentially made 18 points, okay? So that's how simple this technique is. Extremely simple. Once again, you're going to have to decide exactly how you want to enter, where you want to place your stop, where you want to exit. But we're just sharing with you this technique and how simple it is to apply. All right, so let's look at some recent examples and see how consistent this method could have been roughly in the last month. Some of the examples I'll share with you within the last week. Okay, we're looking at VRSN, okay? We have the dynamic stops. We're only interested in the ones below the 20-period moving average. Now, here's one, the first one that was generated. So you wait for price to come up and penetrate, unless another one was issued, and another one was down here. So we're not interested in buying up here when we can wait to buy here. So we wait to see what happens, okay? So on the next day, at the end of June, price went lower, okay? So we're not entering yet. But right here on this bar, we penetrated that level at 163.05. So this is where you would have purchased. Using a generic stop, you would have placed it right here. And coming into July, see how simple that was? Stock went up 25 points. You could have potentially captured 25 points. Remember, this is not a strategy. So I'm not saying you would have made 25 points. You could have easily made a point profit and said, I'm out. That's a nice point. I'm getting out and moving on to the next one. It's up to you. Remember, our job as educators is to provide you with high probability methods and techniques and strategies so that you can decide whether you want to trade them and how to trade them. Here's an example in KLA Corporation, KLAC. All right. Once again, we're below the 20-period moving average. Here we have a dynamic stop, but it's above, plus price, the price bar is crossing. We want to only look for price bars that are not touching this 20-period moving average, okay? Now, it's okay if our entry is above. We just don't want that setup bar, which is below the dynamic stop, to be touching in any way. So let's watch the trade unfold. The next bar goes lower. And the next bar is where we would have entered. Now, once again, someone would say, but Steve, you entered above the 20-period moving average. That's okay. All we're concerned about is the bar that has the stop above it, the stop level, is not above the 20-period. In fact, it's not even touching. So you would have entered here. And then the second question I usually get is, well, Steve, yeah, but it closed lower. So that's okay because your stop is down here. Now, if that's too much risk, then don't take the trade. Wait and see if another stop was generated down here. But had you taken that, well, potentially you could have captured 42 points coming into last week. Here's an example in Netflix, okay? Once again, we have the 20-period simple moving average. We have 2 stops above the 20, so we're not interested. We're waiting for one to be generated below. And here it was on the 13th, as you can see, of this past month, just a couple of weeks ago. So you would have entered actually on the 15th when it penetrated that level. And as we can see, Netflix had a nice little run up of 50 points in the next week. Okay. Let's look at HCA. Now, I want to, specifically share with you the example because I want to show you how consistent this method is. Now, I've always said this, people think that consistency means that it has tons of winners, that it's always winning. But no, a consistent method is one that's able to recoup losses, because we are aware that this will not work 100% of the time. Nothing does. I've been trading for 45 years. I've never seen a method, one that I've come up with or one that was taught to me or one that I've seen someone else trade, that is consistently making profits on every trade. Just doesn't work that way. Okay, just like every athlete does not, hit a home run every time up at bat, does not make a basket. Every entertainer does not have a hit movie or a hit song. It's the same way with trading. Not every setup is going to be a winner, but you want to be able to have a method that's able to recoup those losses, that you can feel confident in taking the next setup. All right, let's look at this example here. We are below the 20-period moving average. So we're looking at all these setups right here. Now here at 83.83, we never got up there. The next one is down at 83.68. We never touched there. Now we're going lower. So this is good, telling you that you'll get it at a lower price. So we haven't touched this one yet. As we see, price starts to bounce up, and now we did penetrate it. So this is where you would have got long. You would have placed your stop just below the lowest low. And so you're all excited. You say, hey, I just became a student of this dynamic stop course. I'm all excited. It's expensive stock, so I bought the calls. And guess what? You're stopped out. You take a loss of 10 points, okay? You say, hey, this doesn't work. I thought this was supposed to be, a really good technique. Steve says it's very consistent. Remember, consistency is an awareness that you will have losses, but a consistent method is one that's able to recoup those losses. So you have to, stay in the trade. You have to remain, very focused, because another setup may occur. You can't just go in the corner and wallow and say, hey, this doesn't work. Boy, I'm going to play that victim game again, the way most traders like to play. You have to say, okay, that one didn't work. I have to be ready for another one that may come up. So you took a loss here of 10 points, and then look what happens. Price starts to bounce again, and here is the last setup. So this one is valid. You could have entered right here again, placed your stop just below this, and potentially captured 40 points. So you just got in a little bit too early. Now you think you could have made back that 10 points and then some? This is what we mean by a consistent method. All right, now let's look at another market. This is the Swiss franc, okay? Any currency pair traders out there? Just because we switch markets does not mean that we have to switch the technique. Same process applies. We're above the 20-period moving average, so we're not interested in these stop placements here. But once we cross below, now this one is, even though we close below, we're intersecting the 20-period moving average, so we're not interested in that. Remember, we want to see bars that are completely below. Now this one is valid, so we would have placed a buy stop here, but another one was generated even lower. So this is where we want to get in, right here, 95, 86, 87, place our stop just below the low. And coming into this last couple of weeks, we could have potentially made 300 pips. That's $3,000 per unit in a couple of weeks, potentially. All right, that's the Swiss franc. What about cryptos? Here's a 2-hour chart of Bitcoin, okay? Now this is just coming into a week ago, last week, as we can see on the 17th of July. Price crossed below the 20-period moving average. Here we have our first setup below. That's our stop level. So we place our stop just below here. Could have bought on a 2-hour chart, and then coming into the 18th, which was just last week. Look what happened. 3,200 points to the upside. All right. Think you could have taken advantage of that nice little quick trade? Now here's a 10-minute chart of the spiders, because we know that some people like to trade intraday. Well, once again, nothing changes because we've changed the time frame. As we see here, the spiders are well above the 20-period simple moving average, and all these stop levels are generated, but we're not interested in them until we have the first one below. So that's where we would have entered right here, 380.86. We place our stop down here, and in the next day or so, we could have potentially made 9 points to the upside. Now, here's where I actually like this with very inexpensive stocks, as we can see here. Oops, I think I kind of jumped. No, here we are. GOEV, okay? Now, the same process applies for inexpensive stocks. Now, this is a dollar stock, but nothing changes because it's that inexpensive. And we've seen a lot of times these very inexpensive stocks will take off and jump, and people go, wow, I wish I would have taken advantage of that really cheap stock. I could have bought 10,000 shares for that small amount. Well, here's one way to take advantage of that. Once again, we're not promising that it works 100% of the time, but I have seen it works extremely well on these inexpensive issues. For example, here's the 20-period moving average. We have two bars that intersect, so we're not interested in these. As we follow it below the 20-period moving average, we see we have a buy stop here, but was never penetrated. As we go lower and lower, here's where we have the buy stop at 2.23. So we could have entered right here, placed our stop right here. So we're basically risking about 50 cents, half a point. And look what happened in the next week. This was coming into the mid-July, okay? Now you could have gained 2.5 points. I know a lot of you were saying 2.5 points, that's nothing. I want to get these big 40, 50 point gains. But remember, this was a $2 stock. You could have gotten into the stock at 2.23, and that's a 100% price gain in just 1 week. Imagine if you owned Google or Tesla or Apple and you had 100% price gain. It doubled in price in 1 week. It's all relative, and you can try this for inexpensive stock and see if this works for you, okay? Okay, let's review this technique once again. Remember, the dynamic stops are based on stop price that's based on market behavior, okay? So we're really looking at this not to find the most recent high or most recent low or short-term top. That's not the way this works. It goes off market behavior, and that's how it determines where these stop levels are placed. So as we can see here, the main function is to keep you in trades as long as possible, as it did here in this Oracle trade, okay? But we have found out that there are other advantages of applying and trading with the new dynamic stop levels. And the main one is what I just shared with you today. That's the perfect tool for breakout traders. So if you're a breakout trader, you no longer have to wait for it to break out above so-called support or break down below so-called resistance. Basically, looking for market behavior to tell you where that breakout is. And just with a few little parameters, a few filters, such as the 20-period simple moving average and where to enter and where to place your stop, you can have a nice consistent technique here using the dynamic stop levels. So we have a great special attendee offer for all of you taking time to watch this video today. We're going to offer you our dynamic stop 2-part course at an extreme discount today. All right. Now, this is a full double video course. The first half, the first part of this course deals with using this specifically just for stop placement. If you're in a trade already or deciding when to get in, and applying this as a risk-based parameter for your trade, okay? Remember, you can apply this to virtually any strategy, any market or time frame. You can actually apply this to your current strategy or build your own strategy based off of this. Remember, all these stops on our platform are auto-generated. Now, the second part of the course, as you see here, deals with a more advanced way of trading it. We're going to share with you 3 proprietary trading techniques, all right? Now, these are different from the technique I just shared with you today. Now, as you can see, there's this little asterisk right here. The reason why is because this is more advanced, and these 3 proprietary trading techniques require that you have the PET-D because they're in sync with the PET-D. The good news is the technique I just shared and taught with you today does not require the PET-D. So you can still be trading using this as a stop placement and also trading with it without having to have the PET-D, okay? Now, the last bonus of this dynamic stop course is that we're going to throw in a full year of the PTS Primo charting platform. Remember, you can only apply this on our platform. So we're also going to include a full year with this great discount. Now, a lot of students say, well, Steve, sure, if we have an up market, this is great, but what if we have a down market the way we did last month? I mean, can I use this? Sure, all you're going to do is just reverse the process. For example, here's a recent chart going back a couple of months in Oracle once again. This is a daily chart though. First thing you want to do is apply the 20-period simple moving average, okay? Price is above. So we're looking for a breakdown below, right? Now, if you think we're in a down market and we're going to be going lower, you apply the dynamic stops. Once again, these are the sell stops in red. All right, so you look for just one of these levels to be penetrated. And as you can see right here at 81.47, we penetrated it right there. So that's where you would have sold or bought puts, however you want to trade it. It's up to you. Okay, and you place your stop somewhere above here, the same process. Okay, And you can see the stock fell 15 points. Or a more recent chart in CVX, this was just last month. Once again, it looks like we're going just sideways, nothing really happening here. But if you think the market's going lower, apply the 20-period moving average. If price is above the 20, all right, then we apply the dynamic stop buy levels, because we want those buy levels to be broken or penetrated. And as we can see here, none of them have been penetrated until this one right here. So that's where you would have sold. You'd place your stop somewhere just above here, the last most recent high. So if it goes back up, that's where you'd be stopped out. But in this case, you wouldn't have been, and you could have potentially captured 40 points coming into the first week of this month, July. Okay, so you just reverse the process if you think it's a breakdown to the downside. Okay, so let's see how much this discount is going to really help you. Okay, remember, this is a two-part course. The first part deals with just applying it as a basic stop. The second part deals with advanced ways to trade it, okay, which does require the Pet D. Now, the regular course price is $39.95, but we're going to discount that to all the attendees today for coming to this video presentation. We're going to drop the price by $1,000. You're going to save $1,000 or 25% discount. It's going to be just $29.95. Here's the even better news. For a limited time, we'll have payment plans available. So if $29.95 is still too much to come up with, for a small deposit, you can still be up and running and using the dynamic stops as early as today. This is a great, great offer. Once again, you're going to be saving $1,000. That's 25% off the regular price. And remember, it includes a full year of the PTS Primo charting platform. And the platform comes with a host of other different methods, techniques, and ways in which to trade that are totally separate from the dynamic stop course. So you're getting a ton of ways to elevate your trading. I know a lot of you are saying, well, Steve, I kind of, I've watched your videos and I kind of watched this one and I kind of have it figured out. I don't really need these because I know how to do it. For example, you could look at this chart here in ZTS last month and say, there's a breakout. Okay, I know there's most likely a stop right there. And once you broke out of that, I'd buy. But then look what happened, okay? This is why you can't just rely on what you know, because remember, the stops are based off market behavior. Now, if you did have the dynamic stop levels, you would have seen that, well, we're not going to buy above the 20. We're only going to buy below. And we're going to wait for a dynamic stop to be generated. And nothing was generated yet until right here. That's where you would have bought, not up here. You would have bought right here, but you only would have known that if you had the dynamic stops, and you could have potentially captured 20 points coming into this month, July. Now, we've also seen another example here in Snap, okay? Someone could have said, oh, Snapchat, there's been a lot of talk of this lately. Here's got to be a dynamic stop level right here. So I'll just buy right here. And look what would have happened had you bought right there, okay? Once again, you need the dynamic stop levels to tell you when it is the right time to get in for a breakout, when these things are going to occur. And had you had the dynamic stops, you would have seen, well, we were above the 20, so there's no reason to buy. And a dynamic stop had not yet been generated, so there's no reason to get involved in this. Don't wait another year to become a consistent trader. Take charge of your trading for the first time. Remember, we are first and foremost an educational company. We're trying to provide you with all these techniques, methods, and strategies that have high levels of consistency. And then we work with you and take every step along the side with you so that you can make your own trading decisions. I want to make sure that you just don't have a good couple of weeks or a good month or maybe even a good year, but that you have a really good decade or a couple of decades. That's what my goal is as your mentor. So here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts. You can sign up through them over the phone. I would highly suggest giving them a call if you're interested in finding out about a payment plan, about what is the amount of the small deposit you'd have to come up with. They're very flexible. They'd be willing to work with you, and there's absolutely no obligation to get a quote. I would suggest giving them a call at 310-598-6677. They have trading consultants working the phones right now. They can take your order over the phone if you're interested, or they can give you a payment plan quote, or they can answer any other question you may have about the platform or about data or tech support, things of that nature. Now, that link you see at the very bottom is the link that will take you to the info page. Well, also you can sign up there if you'd like. It's not a live link, but a live link has just been posted in the chat box. So if you open up your chat box window, you'll see that there's the link, and you can just click that on, and it will open up a info page for you. Now, I promised I would answer any questions. If you do have any right now, please, go to your chat page, open that up, and just type in any questions, and I'll answer them to the best of my ability. Someone's asking, how do I get in contact with you? Is there someone to help me along the way? Since this is a video course, what do I do? Well, yes, it is a video course, a two-part video course. But remember, each and every one of you will get my private email address. You can contact me whenever you'd like. So there's absolutely no problem with doing that. Okay, if you have any questions, it's not like we just leave you out to dry. You can contact me whenever you'd like. Okay. Someone's also asking, can I use this on my platform? Well, right now, this is only available on the PTS Primo charting platform. So let's say you use Metastock or a TradeStation. What you can do is toggle back and forth. If you like to trade on those platforms, you can do what I'd say the majority of all traders do is they open up one platform to find out where the stops are, and then they just know where that is, and maybe draw a little line on their other platform to know when they'll be exiting or using that for an entry point. Okay, so myself included, for example, I will look at my platform to get the ideas and the different setups and know where these levels are, and then I'll just simply apply them when I enter my stops or enter my orders. It's very simple. It's not that complicated. But remember, with this, you also get the platform, and you get a host of other techniques that I've taken from my 45 years of trading, things that you won't find on any other platform, like 4 separate ways to find out what the overall trend is, or a price bar pattern that tells you what the short-term trend is. Okay. Or we have auto-generated exit levels that you'll only find on the platform. You also have scanning ability on the platform. So lots of great extra bonuses that you won't find anywhere else, and you can scan for all these tips and techniques. Okay, good questions. Any more while you have me here? Okay, if there are no further questions, then please remember, give Pro Trader Strategies a call. There's absolutely no obligation. I know a lot of people are afraid to call, thinking, well, I don't have $29.95. Remember, if you want to set up a payment plan, they can give you a quote over the phone. They'd be more than happy just to talk with you, and they're very flexible, and they'd be happy. There's no obligation, happy to give you a quote and happy to answer any other question you may have about pricing and discounts. Okay. As we close up here and take one last look at our disclaimer, thank you so much for taking time out of your Wednesday to listen to this educational presentation. I hope you like this technique. We've had a lot of great feedback from our students right now who are using it, and I hope I can teach you it and many more other techniques in the dynamic stop course. Thank you so much for attending. I wish you a great trading Wednesday, and I hope to see you next time. Bye-bye.